Hi everyone, Brian from Bear Bull Traders here. It is the weekend and it is the last day of September, September 30th. The Bulls definitely glad that this month is over. September, of course, seasonally speaking, over the years has not been a great month for the markets, and this one certainly lived up to its reputation. So let's see what we got coming down the pike next week. Not a lot of earnings going on. Still sort of in between earnings seasons, but maybe something interesting will happen as we get into this last quarter of the year. So let's get down to it. Okay, quick look back. What happened last week? It was a pretty volatile week as I had expected. Economic data is finally showing some cooling, albeit it is pretty slow. The Fed's favorite inflation indicator, the PCE price index, it did come in under 4% finally. That's good, but still a long way from the 2% target. Investors are still struggling to digest this higher for longer message on rates, something that the Fed has been animate for some time now, but investors are finally starting to listen, apparently. On the week, we had oil prices up, treasury yields were up again, and of course the dollar moved up with the yields as well. So all that creating some challenges for consumers. The indexes mostly down on the week. The Qs did manage to eke out a bit of a gain there. Energy sector with the rising oil prices obviously was up the biggest on the week. Utilities, those are the ones that are competing for money, and with yields going higher, of course, that makes them less attractive. And consumer staples, again, sort of surprising, but it was also a loser on the week. 2-year Treasury, again, up again this week, over 5%, well above 5 now. The 10-year eking up as well there, 4.44%. And yields continue to move higher. And the dollar, of course, moving up with that increase in yields. The Bitcoin's trading around 27,000 now. That's up a little bit from last week. So again, kind of stuck in a bit of a range here, but Bitcoin's still hanging in at around 27,000. So that was the week. So before we get going, looking at some charts here, again, quick plug for my book on Amazon, Profiting as an Active Trader. I do have another book there, How to Swing Trade, and you can check either one of them out on Amazon. Rules, strategies, and the routines of an active stock and option trader. So if you're interested, there they are. So let's take a look at some charts here, and we'll get going with the, as usual, watching the yields, 2s and 10s. You can see here the 2s really just sort of flatlining along here, still hanging above 5% on the 2-year, and doesn't seem to be going up, but it doesn't seem to be going down, so higher for longer. And the 10-year is actually starting to break out here. So we got to this, back to this 4 level, which was an area back in October. We kind of broke out, hesitated, came back, and now we are breaking out again. And it looks like the yield curve may uninvert. So in other words, the 10-year is getting closer and closer to the 2-year. 2-year's not dropping, but the 10-year is coming up. And usually when they go back to normal, which is the longer the duration, the higher the yield, when they start going back to longer after they've been inverted, that's sort of the sign of when we get into a recession. So we'll see what happens here. But again, we are breaking out. If we do go into a recession, a lot of people are saying that it will be a mild one, given the strength of the economy. So we'll see about that. Anyway, transports, trending definitely in a downtrend, and we're holding on to this 200-day moving average now. On a weekly, a bit of an indecision candle here. We are back into sort of an area of prior resistance, which is now maybe becoming support. These moving averages here. So, we are going through September, which was traditionally not a great month for stocks. And again, you can see on the Dow, we really broke down here from this 34,000 level and came right down. Now we're sort of hanging around this 33,400 level. But again, the daily, this was a terrible trading day on Friday. We started gapping up, looking pretty positive after a positive finish on Thursday, and we basically lost everything we gained on Thursday. The volume a little bit heavier on Thursday, so looking at the stochastics, they are trying to move back up, we are trying to move back up on RSI, so maybe we're finding a bit of a bottom here after this significant sell-off. It's probably going to be the same for most of the indexes we're going to look at here. The Qs, again, good day Thursday, gap down, came back up, and then gave back a lot of it on Friday, as there still seems to be a lack of buyers and still some sellers in the market that are nervous and maybe looking for some other alternatives. I mean, with the yields up at 5%, you know, you can get a pretty decent return without any risk, almost, basically. So again, this 365 level would be a gap fill for the Qs. We did actually try to make it up there, couldn't do it, and pulled back on Friday on volume too. So a bit of a sell-off on Friday, even though we did eke out a bit of a gain Friday. And on the week, we do seem to be trying to put in a low here on the Qs. So looks like we could inch up again. Volume was a little heavier this week. The SPY, I'm not going to repeat the same story over and over with the indexes here, but you can see we are still down on the week. This came down here and almost got to support around 420 and came back up again. So again, maybe trying to hold a level here for the time being. The IWM, actually not a bad week actually, and then it really started to break out, what looked like a breakout on Thursday, and then we gapped up Friday, filled this bit of a gap here, and then we is promptly pulled back into this prior day's trading range. So again, pretty heavy volume in the last couple days. Let's see what it looks like on a weekly. Again, on a weekly, not a bad looking comeback after a bad week overall. So you know, we are into an area where there's some pretty significant support all in this area here, this sort of 172, 173 area. So stochastics could be starting to bottom here and move back up, but MACD again sort of slipping down. RSI maybe turning back up a bit here, so possibility for a bounce. The VIX, again, had a big spike up during the week, came back down, kind of spiked up a little bit on Friday, but maybe the top is in here, time being, get through September. The dollar, again, just still in this solid uptrend. You know, you get these little pullbacks, but this trend still is intact. We were above the 20 moving average, which is, you know, holding as support here. And until we kind of break this line, this trend line here, it's still solidly up, and as long as interest rates stay high, probably going to be the case here. So this 30 level is obviously some area of pretty significant resistance. Saw that back in the September 2022 in this area, so definitely could be looking at another sort of stalling point there on the dollar, which would be positive for emerging markets and some of the commodities. Bitcoin, we're trading around 27,000, had a big dip here over the week, came down to 26,000, and then we punched right back up again. So I feel like this is a pretty manipulated chart, or price, I should say. The chart's just reflecting maybe some manipulation, I don't know. But Bitcoin is, again, sort of trading in a range here at this point, between 26,000 and at this point, this 27, 28,000 area. And that's about it for our stocks, or at least I should say our index charts. Let's take a look at some specific stocks that I was looking at. I did some trades last week and some options. And if you were following in the room, but Apple here really selling off. We released that iPhone 15, sort of mixed reviews from what I've heard so far. Not as durable, although people are dropping it from a pretty high level to get it to break. The older ones don't, but the new one does. But I'm not sure who's going to drop your iPhone off. I guess it could fall off a 10-foot wall, but onto the concrete. But the unplanned event. So again, this 170 level really held on Apple. You can see here we came down, tested it, finished the day above it. The end of day price is always the one that's sort of the most important. Again, we did come down on this 28th day, actually came down to 67.50, bounced off there, and then came back and actually finished the day in the green on the day, or higher and above 170 again. So this 170 level seem to be trying to hold it above that level, or it seems to be holding above that level. So 170 again becoming a pretty critical support level, but we are in a well-established downtrend on Apple. Amazon, that news came out about the Department of Justice, I think it was, and some of the states suing Amazon, and of course reacted accordingly. Now we're down quite a bit. This level of 122 could be an area where it will find some support here, um, and and sort of await the outcome, because I don't think this is going to be like a small, a slow-moving car crash, um, as they work their way through the courts on this one. CCJ has been an uptrend, but now it seems to have found a top at this point. I think uranium still has a good bid under it, the commodity, but again, we're looking at some topping action here. Tried to get above 42 on Thursday, couldn't hold above it, and now we had a pretty significant pullback Friday on that Friday sell-off. So this 39 level looks kind of interesting for as a hold, and you could use this low as a stop. So I'm going to set an alert there for 39 and see if we get there on this week. Dell's been really hanging in there. I've just been watching it. I've been looking at was looking at selling puts and calls, like selling a 67 put and maybe selling a 72 call, just because it seems to be just really range bound here. But the premium isn't great on it, unfortunately. LAC announced that they have. I was looking at this because it was they're splitting the company into two. It seems like that's going forward, and that's what that big spike was up on Friday, but unfortunately couldn't hold those gains and it pulled back. But I'm still holding some for this this split here. Meta, I think people knew in the room I had some 290. I had some 290 puts that I sold, and obviously sold them around Wednesday when this dip happened, and it came back up, and it went out well above 290, so I just kept the premium on that, and that worked out to be a good trade. So we'll look at that in Meta again next week. Meta again looks sort of range bound here, 310, 290 or 280, just sort of holding in there. So again, that's why I like this one for a non-directional play on using options. Don't have to bet high or low. Going higher or lower, you can make a bet that it's not going to move. Nvidia, again, I've been buying some Canadian, some Nvidia in Canadian dollars. There's an ETF in Canada, and so I bought some of that. It came back up nicely, sold it, and still have a little bit of it left. But I think not sure if it's going to break above here. This 438, 440 level looks like an area that was prior resistance here, support here. So 440, kind of a nice round number to take the profits there. Rivian's one that's kind of interesting. It really sold off here, but now it's come back nicely. It's right at a point of resistance, so I'd be looking for a bit of a pullback, maybe to around 23, and maybe get long for a break higher here. So again, I'll set an alert on that one, see if Rivian gets back to 23 for an entry. Don't want to chase it where it is now. Schwab, I think Schwab's in, again, Schwab was one of the ones that really got hit on this SLB, Silicon Valley Bank. It seemed like they were lumping Schwab in with that, with the negative equity. And so what I've done here is right now I've sold some 56 calls, and I've used that money to buy 53 puts, thinking that there is more downside on Schwab. And so those are expire next week, and they didn't really cost me anything because I used the premium from the call to buy the puts. So we'll see what happens on that one. Hopefully it'll continue to go lower. Tesla's interesting. Be careful on Monday. I think they're going to come out with their delivery numbers for September. And I think people are expecting they're going to be down because they've been cutting back some of the production, I believe. So just we'll see what happens on the reaction to that. And if we get an extreme move one way or another, be looking to either sell puts or calls on that one. XLE, again, the biggest gainer on the week, but it really sold off Friday. It really took a hit Friday. with the rest of the markets here, and seems to be pretty toppy at this point right now. So all the sectors look pretty ugly actually this week when I was going through them. So energy, definitely a buy, or at least a good buy, maybe at around 89 if we get there. Retest this level again. Set an alert here. See if it comes down there for a bounce, and then use a stop just below it, maybe a gap fill here of see somewhere around 80, 88 something, 88.60, somewhere in that range. So that's it, everybody. All right, wrapping things up here. Here are the levels that we went out on all the indexes on Friday. There's your support and resistance levels that I see. Economic data. There's some stuff scattered through here. ADP employment report. That'll be interesting at 8:15. Of course, employment has been in focus as a driver of inflation, which brings us to Friday, which are some employment reports and hourly wages. Some of this data that's coming out is obviously contingent on whether the U.S. government can pass some spending legislation on this weekend, because if the government doesn't do that, then of course a lot of government employees will be out of work for the time, and a lot of this data will not be generated. So anyway, we'll watch what happens on Saturday. So coming earnings, of course, again, we are in the middle of earnings season, as between earnings seasons, as I've mentioned here, so we don't have a lot coming up. Tilray on Wednesday before the market open. Constellation Brands, Conagra, and then Levi after the market on Thursday. Kind of the only ones that are really standouts there. So yeah, it's pretty light this week, and we've got another couple of weeks before earnings season starts up again. So that's it, everybody. We will be seeing you hopefully on Monday morning at 8 o'clock. We are live on YouTube. You can catch us there for free, and then of course we will be trading the market open with our members at 9:30. So we'll hope to see you there. Have a great rest of the weekend, and hope to see you Monday. Bye for now.